All right, today let's dive in to a project you guys recognize a lot, and that is Avalanche. We'll get in deep. It's going to be a good one. My name is Paul Barrett. Welcome back into the show. Let's get into it. I do want to thank our sponsor, and that is Coinbase. You guys can jump over to Coinbase.com. All you have to do is use our link down below. It's going to get you a little bit of a bonus when you sign up and make your first trade. A great place to get started, so check it out. Use our link. It does help the channel. When you look at the opportunity that's happening in blockchain right now, especially around Avalanche with everything that's happening, I'm looking at this right here, and this is tokenized stocks. The Onchain market value up right now, 14x. Right now, it's pretty much being led by X stocks and Ondo. And it's something that we've been watching for a while, and it's getting a lot of legs underneath it. Very interesting in terms of growth. I also want to go to a clip that will explain something that is happening right now. It's the first ever Perps DEX that launches on Avalanche. Take a look at this clip.
Here we go, guys. It's now officially the first ever Perps DEX on Avalanche to offer Forex, stocks, crypto, commodities, all from the comfort of your own self-custody wallet. We need to spread the word. We're the first ever Perps DEX on Avalanche to do this. Built on the best chain in the world, in my opinion, which is the red chain, which is Avalanche. No funding rates, no borrow fees, no slippage. The fees are minimal.
Nobody's talking about that one. I was surprised when we got a chance to pull that in. If you look at DeFi Llama right now in general, this is starting to climb. We're starting to see a lot of movement here on the AVAX, the red chain, as he calls it. It's pretty cool. I want to bring in one of the team members over at Avalanche, and that is Morgan. How are you? Morgan Krupetsky, who is the VP of On-Chain Finance at Avalanche. How are you?
I'm good. Thank you for having me.
So Morgan, a little bit about your background. Where did you come from? How'd you get involved with AVAX?
Sure. So I've been at Avalabs for a little over 3 years at this point. I joined as head of institutions and capital markets, really meant to kind of bring TradFi onto leveraging the Avalanche blockchain network. And really, since I joined, the worlds of TradFi, DeFi, CeFi have really converged. Now, the remit has really expanded to include DeFi and institutional DeFi, as well as tokenization, payments, and Treasury, as well as institutional and wholesale finance. Before joining Avalabs, I was at Citi for 12 years. Most of that time I was doing capital markets, specifically FX and macro derivative sales. So I was covering hedge funds, asset managers, and pension funds. And then the last 2 years I spent as chief of staff for Citi's chief compliance officer. So kind of went down the rabbit hole, so to say, and got very excited about the possibility of this technology being blockchain tokenization and really smart contracts and the concept of programmability to really upgrade legacy financial services infrastructure and institutional workflows. So a lot of the work that we're doing from an institutional perspective at Avalabs as it relates to growing the adoption of the Avalanche blockchain network is really helping to drive that forward, really upgrading legacy workflows and just how TradFi, as well as even neobanks and fintechs, how they operate, how they can start to kind of offer net new product services and capabilities to their customers, leveraging this technology, but abstracted in the background.
I know you guys have made a lot of inroads. We'll talk about those in a minute because there's been some pretty big uptake and growth in terms of institutional capital. You also, if you look at what's happening in the market right now, obviously Anthony Scaramucci brings in AVAX One, which is going to be the first digital asset treasury, first of its kind, and a public company out there, and really being promoted by one of the biggest Avalanche, I think, cheerleaders out there, which of course is Anthony Scaramucci. He's been on this for quite some time. Do you think that he will tokenize the Treasury ETF on Avalanche?
I don't know if he will, but I think we've seen others kind of exploring that as well in various other ecosystems. So we'll see if that does happen. I think the idea is to kind of create a little bit more utility and asset mobility in the tokenized version. So we'll see how it plays out.
Listen, I'm looking at real world asset value right now, holding at about 726 million. And I want you guys to zoom in on that. That's a 50% increase in the last 30 days. What is the year-end prediction for this? I mean, that's crazy in terms of climbing.
Listen, we are on a mission to digitize and tokenize the world's assets. And so I think that is only kind of the latest reflection of those efforts. At this point, that includes Anthony Scaramucci Skybridge funds, having been tokenized on Avalanche in partnership with Tokeny, as well as Grove's commitment to investing in up to $250 million in tokenized assets on Avalanche as well. I would say those are the two most recent developments. Obviously, there's a lot more kind of in the pipeline, but I think, we've seen the proliferation, especially over the past year, in the quintessential tokenized asset, which has been stablecoins. And then by extension of that, I think we've seen a lot of uptake in tokenized money market funds, as well as starting to now really see the growth of private credit on chain. And so I think that will continue, and we can kind of talk about that in a little bit more detail. But I think also, to your point, there's been a lot of interest in tokenized equities and what that looks like. And there's obviously a lot of different players, including Denario and Avalanche, driving that forward as well.
Do you think that they understand the core thesis behind Avalanche and what it's trying to do?
Well, I've been on a mission here for 3 years to get institutions to
try to get it
to understand exactly that. Yeah, I mean, I think, I think Avalanche, we just celebrated the network's 5-year anniversary. So it's definitely newer than, say, an Ethereum, for example. Right. I think, back when a lot of banks, especially an FMI, started exploring blockchain, they really only had kind of two options. They had public permissionless Ethereum, and then they had, what we would call enterprise blockchains that are, fully kind of owned end to end by the particular institution, and so therefore can be permissioned in private, but miss out on all the innovation and liquidity and integrations that come with the public permissionless ecosystem. So when I joined 3 years ago, I was really on a mission to educate institutions, whether that's banks, asset managers, FMI, central banks, that there's this thing called Avalanche, which really offers the best of both, right? The best of both, a public permissionless ecosystem with DeFi primitives and innovation and integrations and liquidity, but then also the option to kind of create your own custom L1 environment to fully own it, as well as make sure that it accounts for all the kind of compliance controls and regulations that are required for a regulated financial services institution, but it's not in isolation. It's natively interoperable with the rest of the network. And so in that way, an institution can kind of get the best of both. And since I joined 3 years ago, I've really been on a mission to educate, banks, asset managers, FMIs, FMUs, as well as central banks that, there's this thing called Avalanche, and it really offers the best of both. Given our partnerships and the work that we've done to date with institutions like Citi and JP Morgan and the whole host of different asset managers like BlackRock, Wellington, Van Eck, the list goes on. I'd like to think that we've achieved a degree of success. I think there's definitely more work to be done, but we've definitely kind of made a dent in the institutional landscape. I'm
looking at DeFi and the landscape of DeFi, and then I try to think like Anthony Scaramucci. I don't know if I can do that, but if I'm holding a DAT out there, one of the biggest, which will eventually be on Avalanche, where would I look at restaking? If I kind of go down into the list here, you can kind of see some of these that are listed in here. Where do you think he would pull the trigger and go for restaking? What do you think he'll utilize? I'm kind of curious.
Well, I think Banky at this point is probably the largest protocol in that realm. Yeah. We have a kind of a wide variety from an institutional perspective, as well as a lot of different institutional partners that kind of provide enterprise and institutional grade staking and restaking capabilities. When the network first launched, the team really focused on cultivating a robust, what we would call liquidity hub in Avalanche C chain. And so there, they ensured that there were the top tier DeFi protocols, as well as kind of custodial and exchange integrations, on and off ramps, stablecoin integration, so on and so forth. And so I think looking to the various protocols within the Avalanche C chain is really the hub. And then, the various L1s within the network have the ability to kind of tap into and leverage that hub as they bootstrap their own networks.
Yeah, we have been testing quite a few of these. We've talked about a handful on the channel here. Avant Protocols, one we've tested. A handful of others. Obviously, you guys have seen us. We've had an interview with Carlos over at Securitized, but there's quite a bit moving here. It'd be interesting to see how these digital asset treasury companies put these assets to work. I want to jump over to RWAs because this is something that, and it's a hard question, but why do you think we're seeing institutional adoption on Ethereum and not Avalanche here when it comes to RWAs? Because you guys should be the slam dunk here in terms of an option.
Yeah, I mean, I wouldn't say we're not an option, right? We're in the top 5. And I think a lot of it goes back to the fact that Ethereum is just older. And so most institutions have been used to building on kind of, again, these enterprise chains, which are EVM compatible. And so I think from an Avalanche standpoint, that's what's really resonated with institutions, that anything that they've built for Ethereum or for Hyperledger or Quorum is very easily deployed onto Avalanche as well. And I think also what the industry is that leveraging Ethereum as the base layer for a lot of kind of institutional use cases is not necessarily going to be the end state from a scalability perspective.
Right.
And so, again, I think from an Avalanche L1 perspective, the fact that the network scales really horizontally through these custom L1s, a lot of institutions are starting to gravitate toward that. I mean, we have obviously FIFA that has their own L1 on Avalanche, and then even Stripe and Circle's announcements of their L1s, even though it's not leveraging Avalanche, I think it lends a lot of credibility to the thesis that an L1 is kind of the preferred path to L2s for a variety of different reasons.
All right, so let's look at tokenized stocks, because this is another big area that we've seen growth in. I showed it a little bit there in the beginning. When would you anticipate we could see tokenized stocks coming to Avalanche?
Primarily at this point, tokenized stocks on Avalanche are being launched by a project called Denari. You should have them on your show. They're great. They've been at this for 4 years, meaning they've gone down the path of compliance, right? They've been speaking with regulators in the US and globally. They have, registered broker dealer, transfer agent. And so they're taking almost like the hard road to ensuring that tokenized equities issued by them are, as compatible as they are with the Web 2 version or the traditional version. And they aim to be able to offer ultimately their products to people in the US as well as globally, mimicking and mirroring all of the same kind of investor rights and protections, as well as dividends and other types of benefits from corporate actions as holders of the kind of traditional or off-chain version. And so the Denari team actually launched their own Avalanche L1. The idea is for that L1 to be kind of the issuance, trading, and settlement hub of tokenized equities, not just on Avalanche, but on a variety of different networks, including various L2s as well as Solana and others. And so the idea is really to kind of create this ecosystem where if you're holding a tokenized equity on one network, you can trade with someone who happens to be on another network. And in that way, kind of unifying liquidity across all of the kind of instances. And then what I also really like them is they take very much a B2B to C approach to distribution. And so rather than going direct to customer and trying to kind of bootstrap adoption from scratch, they're really plugging into crypto exchanges, neobanks, fintechs, and wealth tech platforms to allow their customers to have access to equities in the US, especially, which is valuable, for those in emerging or developing markets, and others. And so in that way, that's kind of why they kind of called it the Denari Financial Network, because it's really meant to be this consortium or this group of potential distribution partners who are offering, Denari products under the hood.
I feel like the market is growing more toward non-KYC. We're seeing DeFi growth. We're seeing all sorts of Perps opportunities out there. So that's curious that they kind of took that approach. I'm glad that they did, but I'm thinking that maybe that's where the market is going to be going is more in this direction. If you just look at the success of X stocks in general, they've been very, very active. What are your thoughts on that? KYC versus non-KYC?
Yeah, I mean, it definitely remains to be seen. I think that there's a lot of restrictions with respect to X stocks. Like, I think if you look at some of the disclaimers, they're not available in the US, Australia, Canada, the UK, and many other kind of developed markets. So it definitely remains to be seen. Obviously, everyone would love to see tokenized securities trading publicly and permissionlessly. But at the same time, I think a security is a security, and there's existing laws, rules, and regulations governing securities. And so, listen, I'm all for innovation. And if there's a way that from a technological perspective, people can figure out how to marry those two worlds, great. But I think to the extent that you're a company and you want to mirror as much as possible existing securities in tokenized form, you're going to have to kind of follow those laws, rules, and regulations that exist.
Yeah.
And I think there's been various, regulatory bodies who've said a tokenized equity has to kind of mirror those same rights that an investor does holding the traditional security. And so, again, like clearly, I think there's an ongoing debate and exploration around this, and I'm sure at some point we'll see regulatory guidance kind of guiding the best path forward. But at this point, I think there's a lot of different teams testing out different approaches.
Yeah, for sure. Listen, I'm looking at a post that Avalanche put up here in reference to the partnership, Korea's largest multinational asset manager. Explain a little bit about this. What does this mean?
Korea's largest multinational asset manager, Mirae Asset Management, they entered into an MOU with our team, really led by our team locally in Korea, to really explore asset tokenization. And I think that, again, this is a reflection of yet another institution, another asset manager entering the Avalanche institutional ecosystem and really working with us in a trusted advisor capacity to figure out how they can kind of integrate tokenization into their day-to-day operations, into their business model, into their kind of roadmap for different products and services. I think over time, we've really cultivated this reputation because frankly, a lot of us come from the institutional side, both the buy side as well as the sell side, right, where we're not necessarily just, having meetings and talking about why Avalanche is better from a technological perspective, but we're really sitting down with our institutional partners to talk about the use cases, the so what, the implications, helping them make the business case to their governance committees and regulators to say, this is why you should really seriously consider leveraging this technology. And so I'm proud to say that we've done that with partners, again, between Citi and JP Morgan and others. And I think, Mirae's kind of move into this space, into the Avalanche ecosystem, is the latest reflection of that.
Are they really going in hard, or is it one of those things where they kind of stick their toe in the water and then they think about it for a minute? And what's the real backstory to that?
So there's definitely a spectrum, right? So when you think about institutions, I think historically people think about, especially in the crypto industry, incumbent traditional financial services. So a lot of the, oldest banks and asset managers. Even within that cohort, there is a spectrum. There's been some like Goldman and JP Morgan who have been at this for years. And, kudos to the JP Morgan team for having built not only their own blockchain platform, but various in production applications on top of it. And then there's others, and I won't name names, who are just starting to dabble and figure out kind of how they want to get involved. But beyond just banks and asset managers, we have fintechs and neobanks and wealth tech platforms who maybe aren't necessarily as kind of overburdened by years and years of tech debt because they haven't been around as long. They've started with a much more kind of tech forward mindset. They're able to be a little bit more nimble. And so those are the ones that I think are really starting to not just explore, but really start to kind of examine how they can launch these different blockchain-enabled products and services, again, under the hood in their application to their various customers. And so, long-winded way of saying there's a range. Given where we are now versus a year ago versus 5 years ago, we've definitely moved ahead. I mean,
it's a leap.
In the grand scheme of things, we're still early, but it's definitely moved, especially in the past year and a half.
Obviously, regulation has really kind of leaned in on that, and the United States kind of taking a pole position, I think, has really helped out, at least in terms of, forward-looking strategies. Speaking of that, I want to show you a clip. This is Sandy Call. She came on our show from Franklin Templeton, and she's very excited about what's going on in the market. I want to play this for you, and then I have a question after this clip. Let's go to that.
Yeah, well, one of the things we're looking at right now is how people are using vaults and how they're doing some of these looping strategies. We think that's super interesting. This is where we're really intrigued. Beyond just the strategies that are being used today, does this become the way that funds get issued in the future? Algorithmically driven, automated strategies with AI coming into play here. Those plans are on the drawing board right now.
It's like what I'm getting ready to ask. Sandy was a great interview, and she was hitting on a lot of very good points. The question I have for you is vaults. Do you think Franklin Templeton will be the first one to launch an Avalanche vault?
That'd be cool. I don't know if they will be the first, but I mean, listen, there are vault products on Avalanche already. I think, frankly, in the context of Sandy's comments, it actually brings to light what I was saying earlier about the convergence of TradFi, CeFi, DeFi, and tokenization, where there are a lot of these platforms, again, these crypto exchanges, as well as neobanks and other types of fintechs that are not just exploring, but are actively integrating vault products, borrow lend protocols, other DeFi primitives into their backend for their customer base and for their growing customer base. And so it's a way for their customers to create almost like digital savings accounts in some way. I mean, there's obviously different kind of levels of risk depending on what's powering the backend, but offering these new blockchain enabled products and services where the vault or the protocol is fully abstracted from the user in the back end. And obviously there is, the requisite disclaimers and everything, but really making it easier for customers to access DeFi in a way where it's a much better kind of UX and UI than, the traditional Web3 experience of a few years ago. And so I think, again, really this convergence is going to continue where institutions of various types will be leveraging DeFi primitives, could be in permissioned ways, but leveraging DeFi primitives in a way that, to Sandy's point, is a little bit more programmatic. Obviously, you can overlay a degree of AI on top of that to kind of scan which one is the highest yielding opportunity or whatever that may be. But I do think we'll definitely see the proliferation of this convergence.
Yeah, for sure. Listen, I'm looking at the Avalanche Explorer here. I'm kind of curious, when someone, if you think about institutions, whether they launch an L1 or an L2, differences between cost versus security, you get a chance to talk to these institutions all the time. What's the most important to them right now?
When considering kind of an L1 versus L2, I mean, we both kind of have the benefit, again, of EVM compatibility. So that makes it very easy for an institution to launch there versus something like a Canton or others where they need to kind of get up to speed in a whole different programming language. I think the other thing to note, especially when you're talking about transactions in the financial services, you really need instant or sub-second transaction finality. The sub-second transaction finality of Avalanche L1s has been very attractive for institutions, as well as the fact that Avalanche L1s between each other and the Avalanche C chain are natively interoperable. And so they're able to interoperate with each other without kind of third-party trust assumptions between them, third-party bridging providers. They don't necessarily need that when they launch on Avalanche. And I think there's a lot of other kind of customizability as it relates to permissioning at various levels, privacy tooling that they're tapping into, and the ability to leverage a really custom gas token, whether it's a stablecoin or a valueless token, if that makes sense for them. So there's a lot more kind of configuration and flexibility that they get with Avalanche L1s.
I'm looking at the L1s that you guys have over on your network right now, 355, and then there's a whole bunch of hidden ones. How many hidden private chains are there that exist?
Infinity? I don't know. There's probably a lot, and there's probably ones that I don't know about. But I think, at the end of the day, if an institution is choosing to make their L1 private, right, that's one of the big kind of value props that Avalanche L1s bring. And, I think if you have a huge consortium of financial services institutions trading and transacting with each other, there's not a need necessarily for those transactions to be public, right? I mean, they're not public today as it relates to traditional financial services.
True.
And I don't think we're going to get institutional levels of capital on chain until we can definitely solve for kind of transaction portfolio and balance privacy, which we're already kind of seeing adoption of in the context of the Avalanche ecosystem. So, not all kind of networks will necessarily need to be fully public and permissionless, which is why we're excited about Avalanche L1s, because they really allow for the customization of networks based on the particular purpose or the application that's being built on.
What about the partnerships? Should Avalanche focus more on, maybe partnerships, say, like Robinhood or the neobanks or a lot of these emerging market fintechs versus banks? Where do you see the growth, I guess? Because there's going to be a winner and a loser here, I think. What do you think it will be?
We're focused on both. We are focused on both. I think we were talking about this earlier, that in some instances, banks could be slower moving for a variety of different reasons, but we want to make sure that if and when they're ready to fully deploy, various use cases and applications in full production, that Avalanche is in that conversation. So we can't lose sight of that. But I think to your point, yes, there's many neobanks and fintechs that are ready to go now.
Yeah.
And we're definitely focused on those. We are doing a lot of proactive outreach and hunting, finding those players, not just in the US, but in the EU and LATAM and other regions, and bringing them to the table with the various tech enablement partners built on Avalanche who can easily plug into their backends and again start offering these various products and services to their customers. Because in many cases, those neobanks and fintechs don't necessarily want to build everything themselves from scratch.
Exactly.
And so in those cases, we have an ecosystem of really kind of institutional enterprise grade partners who are offering everything from stablecoin or stablecoin as a service to digital savings accounts, stablecoin enabled card products, tokenization capabilities. And all they have to do is kind of plug in and they're good to go. And so we're very focused not just on making sure that we have the partners to help effectuate that, but proactively going out to the various neobanks and fintechs to bring them into our ecosystem.
Speaking of stablecoins, I'm looking at just in general the total Avalanche stablecoin market cap. So this has been going and kind of climbing along, and then it's been dropping here recently. And you have like every stablecoin out there. You guys have to be the king on how many stablecoins are available on Avalanche. Why is this not growing in volume? What do you think it is?
It will. I'm very confident. Maybe have me back in a year. We are really doubling down on payments and Treasury. We actually just hired a lead that will be joining us shortly. And I think that both as it relates to retail as well as kind of B2B payments and wholesale, it's something that we're extremely focused on. Earlier this year, we had a major network upgrade that made it a lot cheaper to send stablecoins on Avalanche versus competing networks. And so we're doubling down on that space. And so I think, all those reasons, I think it will. I also think a lot of it is at this point, a lot of the adoption out there is still related to trading activity and kind of crypto activity. And so we're very focused on driving real world kind of use cases really beyond the crypto casino. And that is really the thing I think that has unified the various builders across the Avalanche ecosystem, whether it's gaming or entertainment and consumer and fan engagement to institutional finance. It's all builders who are building real world applications, which do not happen overnight. But we're really excited about the quality of builders building on Avalanche.
Last question for you is around the Clarity Act. It's barreling toward a decision. We may get it this year, hopefully, if everything comes through. What kind of impact would that have on Avalanche and the ecosystem?
Where we're at today compared to where we were this time last year, it's been like a 180. There's so many regulatory and macro tailwinds that have really seen a lot of institutions come to the table that we've been talking to for years that are basically like, okay, we're going to use public blockchain infrastructure. How do we engage with you guys? What do we do? And so I think it'll just continue. I mean, I think the Genius Act really put a sense of urgency among a lot of different institutions to start to outline and adopt a digital asset and specifically stablecoin or tokenized deposit strategy. So I think kind of more and more regulatory clarity and guidelines will really help to kind of push the industry forward. And obviously the US has been leading that in particular this year.
Yeah, for sure. So Morgan, what's your favorite Avalanche project right now?
Oh, I can't say that.
Come on, give me one. You got one. You have a favorite. Come on, give it to me.
I don't have it's like picking your favorite child.
No,
which one is your
child? I know you have one. You're holding out on us.
Within the Avalanche ecosystem, I'm so proud to be working with, again, just like the real world builders, especially in our kind of sub ecosystem within institutions. A few partners that I will call out, and I'm sorry for those that I haven't named. The Valinor team has been awesome working with them in the context of private credit. Grove, another one, a sub-DAO from the Sky ecosystem, came to Avalanche, working with them on a variety of things. The Denari team is excellent. The Open Trade team is also awesome. But again, I apologize if I didn't name you, but it's just been an awesome kind of thing to see in terms of the quality of builders coming to Avalanche.
Well, that's a good thing. You've got a lot to select from, so that's good. Hey, Morgan, it's been great having you on the show today. Thank you so much for coming in today. We appreciate it.
Thank you for having me. Appreciate it.
You bet. All right, guys, get in on the Diamond Circle. That's our own private group that you can be a part of. It's absolutely free. We always leave a link down below, so you can just click that, join, and get going on that. Follow me out there on X, @Paul Barron. We'll catch you next time right here on The Paul Barron Show.